First technical session. CA Venugopal G is partner in Messrs. Venu and Vinay Chartered Accountant, qualified in the year 2002 by securing All India 45th rank. Sir is also certified Information Security Auditor and has also completed various other certificate courses from ICAI, namely DISA, course on business valuation, course on internal audit, course on fraud detection and forensic accounting. Sir has also completed a one-year course from IIM on data analysis and business intelligence. Sir is an active speaker at ICAI on GST technology and its implementation challenges, and has authored various industry-specific handbooks on GST, conducted workshops on filing returns with ease. Sir has developed a lot of Excel-based free utilities on GST like JSON Reader, creating JSON files, GST Validator, composition versus regulator, benefit analysis, GST impact reader, etc. Similar areas of the practice are design and development of internal controls and process documentation, consulting in ERP implementation or migration, management consultancy for business analysis and growth and design of management information systems, GST implementation and integration of accounts and return filing utilities. Apart from audit, Sir has a hands-on coding in VB.NET, R, Python. Sir also reviews database design and has conducted various workshops for corporates on use of technology, improve efficiency at work using Excel, building automated reports from accounting and financial applications. Sir was behind in the development and managing of cloud applications like TaxSmile, Insta Financials and others. Please put your hands together and welcome CA Venugopal G.
Good morning, students. Before I start, I just want to get to know how many of you are doing the bank audit for the first time? Wow. And how many of you have an experience of doing bank audit? Pretty good. All right. Another question. How many of you have not done any audit in your lifetime? Anyone like that? Okay, there are a couple of. Alright, so my session is about giving an introduction and overview of the bank branch audit. Alright, so you will get a glimpse of what are the various aspects that you would need to consider in doing the bank branch audit. So the agenda of the session, we would look at the bank branch audit, what are the controls that exist in the bank and what is the type of audit planning you need to do. When you do an execution, what is that you have to take care, and how do you build your working papers and using Excel as one of your audit tools. So these are the things which we are going to cover. And of course they will be giving you a material, but however you have notebooks and pen, whenever whatever is the information which you feel that you have to capture, please do capture. So, as I introduce to the bank branch audit, a question to all of you is, what is a bank? So, it's a place where some lending happens, some deposits happen. It's a pretty stupid question, but a difficult thing to answer. If you have to ask what is a bank, yeah, I know that is a corporation bank, SBI bank, all those banks are there, but I don't know. If I have to define a bank, how can I define a bank? Yeah? So, I'm not going to define a bank for you, but however, what are the main focus when you do a bank audit? If you have to ask your seniors or super seniors, if they have to say what is the bank audit, they all would say that okay, you have to look for NPS, you have to look for MOCs, you have to look for IRAC norms, there is a Ghosh committee, Jilani committee report, all those reports have to be filled. So is what is your seniors would be saying. But the days are changing, that has become days of the past. But today, like just Chairman sir has given in his keynote address, he did mention that okay, we have to become like a bloodhounds, and any fraud happens at the bank, the responsibility first comes is like who did the audit of the branch, as if the branch auditor knew that everything was happening. However, the focus of the branch audit in today's term, if you have to ask, the focus is more on the systems and CVS review, doing a fraud assessment, not like a fraud detections, but however doing a fraud assessment, doing an internal control risk assessment, and having sufficient audit documentation. This is the more focus of the audit of the branch today. This is what you should be getting trained yourself in handling the bank branch audit. Plus, it's not that the past did not go, you still have to do that NPA, MOC, IRAC certification, all that exists. But if you see, all the past has bought into one small thing. There's a whole lot of things that needs to be done. The challenges, if you have to see the banking challenges, where does a bank exist today? Physically we see a branch there, but is that the bank? Is that the bank you are auditing? Are the transactions conducted by the bank? I'm sure you have done that, all of you have done various audits. When you have gone for an audit to a client's place, be it an internal audit, stock audit or a statutory audit, you are looking at books of accounts of your clients, and those books of accounts were maintained at the client's premises, and those transactions were of the client. Yes or no? Yes. Now when I have to ask about a bank, where does the transactions of the bank happen? In the bank, in the branch. You are not doing a bank audit, you are doing a branch audit. Is that branch transactions are happening only in that branch? Across. So what is the tag of the branch audit when you are going into doing? So are the transactions which happen during the year in that branch you are going to audit? Yeah? So you are not going to audit a transactions which did not happen in that branch? You all have some bank accounts and that have been opened with some branch that which is designated as the home branch for you. Most of you doesn't even visit. You go to ATM and draw the cash, and if you have to transfer funds to someone, you add them in your mobile as a net banking user and you do a transfer. If your parents have to transfer the money, they neither doesn't come to your branch and deposit the cash. They deposit the cash in some branch which is near to their hometown. Right? So given that you are not visiting the branch, no one is visiting the branch, and your customer account is there, and that is the branch you are going to do the audit. Yeah? So the first challenge, okay, challenge or risk doesn't mean that there is an issue, but you should be present. The first challenge in the banking environment is the transactions happen everywhere. It's an anywhere and an everywhere. Right? So it is little different from the client statutory or internal audits which you have done, because you have gone to the client and that person is completely aware of all the transactions which has happened there. Would the branch manager know every transaction which is going outside the branch of your bank account? If you pull a customer account and ask him why this receipt has come into this account, would he be able to explain? Will he be able to say yes or no? Yes or no, little louder? No. But in your client's place, when you are gone and doing an audit and there is a receipt from one of its customer and there is no sale, you can very well ask that customer why there is a receipt in this account and there are no debits, there are no sales made. And will you be able to answer?
Yes.
Right? So the first challenge in your bank branch audit is the banking is everywhere. Everywhere the bank exists today. The next challenge is today there has been a centralized loan processing system. As I said, your branch is a home branch, but someone in the head office or there is a loan processing cell which collects all the required documents, checks whether sufficient drawing power or whether the account is meeting with all the lending criteria, and then sanction the loan. Once the loan is sanctioned, it is sent back to the home branch stating that okay, so much loan is disbursed, the account comes to you. Is the branch manager sanctioning that loan? No. So the depositors transactions is happening elsewhere on the cloud. Even the lending transactions, the loan is given to the borrower, it comes to the branch for handling some operations. So if you notice, the branch manager is very less aware of what is happening. Anyone who walks into the branch is a customer of the bank but not a customer of the branch. So having said that, will the bank manager know all their customers? So you are auditing in an environment where the owner himself do not know their customers. Isn't it a challenge? Yes or no? Okay. I will come to the IRAC little later. Some other challenges. The audit completion period. Generally, when do you close your statutory audits? 30th September. So that is when how much ever the client is prepared or you are prepared, you have time to close your statutory audits on 30th September and you ensure you want to close it on 30th September. But unlike the privilege, when you have to do the audit of the bank branch, you would be starting the audits as 2nd April and you will have to conclude it by 5th or 6th April. So effectively you have only 4 days left. That's one of the challenge. The staff training and planning. Good that you guys are here, so you are completely trained and you are aware of what needs to be done. But that's another challenge when we do a branch audit. Then the information technology inefficiency. The entire banking environment is today computerized. So you will have to audit all the transactions which are happening in the computer using the computer. That's another challenge. Then there are specific terminologies which are restricted to the bank domain. You wouldn't go to a client and ask, are you compliant with the Basel? He himself asks, what is Basel? You yourself don't know. These are some terminologies which are very specific to the branch. Like just a slide back I used a word called IRAC. So then there is capital adequacy requirements. You are going to certify on all this. So it is very critical that you learn this terminology. Now, if you have to look at the reporting of the bank branch audit, what is that you would report? After the audit, you have the audit report. That's the main audit report. Like in your statutory audit, you issue your SS700 audit report, you have an audit report. Then there is a Memorandum of Changes, tax audit report, certificates you will issue, then a long form audit report. We have a separate session on the tax audit report, LFAR and the other areas. So Vishwanathan sir was mentioning about the audit report. Now let me tell you some key points which has been taken from the audit report. Before doing the audit, you should know what you are reporting in your main audit report. In your main audit report, you are reporting that the audit is conducted in accordance with the standards of audit issued by ICAI. There's a statement which you say in your audit report. I am just saying what is there in your audit report. The second point, you say that the statements are free from material misstatements. So you are also saying that there are no, materially some items are missed, including that 11,400 crore scam. They are saying that there are no material misstatements. Then the statements show true and fair view of the affairs of the branch. You have made an assessment, of risk of material misstatements, whether it is due to fraud or error. You have assessed all the risks which are associated to it. You also say the transactions which are conducted are well within the powers of the branch. The branches are supposed to send various statements, returns, etc. You also certify that the returns are adequate and are in agreement with the books of accounts maintained by the branch. Standard statement, you are capable enough and you have sufficiently asked all the information required and you have got all the information necessary for conducting this audit. You also say that you have overall confidence in the IT environment. This is what you say after completing the bank branch audit. Clear? How many of you are confident of making all these statements? Okay, if your principal gives you the power to sign the balance sheets, how many of you are now willing to sign the bank branch balance sheet?
It depends on how much time they give us to do the audit.
4 days. Extra 1 day you need, they will give 1 day. So how many of you are willing to sign the balance sheets? 1, 2, 3, 4. What? Rest are all you don't want to sign, something risk will happen. It's okay, my principal is signing, that's not an issue. Yeah? So this is not just enough to scare you. Let me give you some more other issues. Let's look at why is this hurry of signing the financial statements. Now, what needs to be finalized is the balance sheet of the bank. How does a bank balance sheet originates? There are various branches which is being audited, which gets consolidated into various zones, then goes regions. The regions gets consolidated, everything gets consolidated, then one final balance sheet which gets released is the bank balance sheet. Then it's a listed company, so they have an obligation to publish it to SEBI. They have a board meeting. There are various other things which they need to do. That is where they do a reverse engineering of saying that okay, if the bank audit, branch audit completes by say 15th, regions by complete by so and so date, then zones they complete by so and so date. Maybe by end May they should be able to complete the audit of the bank as a whole. Alright? If they have given you the audit of a bank and given you 2 months, you will not be able to do it because you have to do the audit of the entire bank. That is where the way it is designed is each one does an audit of the branches. Once we say the audit is done, the audit of the banks will start. Clear? So let's understand what are the internal control systems, internal controls which exist in the bank. So what is an internal control? Internal control is a process which is designed and effected by the management to provide a reasonable assurance. Assurance for what? The operations are effective and efficient. There is a reliability in financial reporting and the controls ensure the operations comply with the various regulatory governance which are there in India. These are the various internal controls. Any control is designed, these are the various aspects which are kept in mind. So why do they design an internal control? To ensure the risks are mitigated. So before you do the audit of the branch, you should also know what are the risks which are there in the bank branch. Is risk a bad or good? Is risk bad or good? Huh? Good to have a risk? No. But the risk is a risk. You can't say whether it is bad or good. Risks do exist. To ensure that it do not do a potential damage, you have controls. Why do you have an internal control? To ensure, to compensate or to overcome a risk. Only when you know there is a risk which exists, then you can build a control around it. Risk doesn't mean it is bad. Risk means there is a potential threat, chances of having a threat. That's all. Risk is not bad. That is where the risk and returns always go to hand in hand. So let's look at banking risk measurement measures. Banks have various committees. The decision whom to lend, whom not to lend is not taken by one person. The decision to set up a branch or not to set up a branch is not taken by one person. To design whether they have to give a home loan at this rate or what rate is not designed by one person. So every activity which happens in a bank is decided by a committee. Alright? So your risk of the centralized powers is gone on, and the risk of choosing whether the right products are being taken or not is gone, because everything is decided by committees. Next risk controlling measure is internal audit. So in the keynote address, Vishwanath sir given various types of audit which happens. One is internal audit, you have concurrent audit, you have revenue audit, branch inspection, head office inspection, and a systems audit. On top of it, RBI also does various audits. I'll give you a glimpse of each audit, why it is conducted, where it is conducted. Firstly, coming to committees. The committees are broadly divided into an executive, operational, risk, and general committees. Even in general, audit related, corporate governance, the shareholders grievance, and investments. Now these are the committees which sit in the head office of the bank. So you got to also understand how the banks work, so that you are well aware of the environment under which you are doing the audit. Now these are the committees who take decisions about various functioning of the bank. So you can be reasonably assured that whatever which is happening in the bank is well designed, planned. Someone has designed it and planned it. It is not a branch manager decision or the cashier's decision. So the committees are there which is taking care of various aspects. The next comes an internal audit. Internal audit is mandated by the RBI, where this audit is conducted by the internal team of the bank. Bank has their own internal team which conducts an internal audit on the supervising the various operations of the bank branch people and their activity. So it is completely done by the people of the bank who are not involved in the day-to-day operations. So operations are conducted by some other persons, but their work is reviewed and monitored by a separate set of people. The next control they have is a revenue audit. There is a special set of team whose job is to ensure there are no revenue leakages. There are no revenue leakages. How could there be a revenue leakage in a bank? Is there a chance of revenue leakage? How?
Commitment doesn't.
Change in interest rate. Does the bank branch manager collect interest from the from all the people who have taken loans? Does he calculate interest and post into the system? Does he decide how much interest to be charged? Nothing, right? It is all done by the system. Having said that everything is done by the system, where is the question of revenue leakage? Does it charges the customer sufficiently? The computers have done a systems audit to ensure that the systems perform well. Like I'm sure you all, when you do the accounting, okay, do you all understand the accounting software Tally? Yes. Do you have a doubt in any voucher that the debit and credit will not match? Even if you enter incorrectly, it will match. Without matching, the voucher will not get saved. Similarly, the transactions which has to be done to the customer or the borrower is done by the system automatically. There is a sufficient audits which have been done on the systems, that whether the systems are performing correctly or not. Because what is the major revenue for the bank? Interest income. And major expenditure? Again interest expenditure. Right? So that being the major item, they always have a systems audit to check whether that is happening correctly or not. Now having said that, will there be a revenue leakage? Ideally there shouldn't be. Right? But if you notice, the system calculates the interest properly. It has a logic, it calculates according to the logic. How is the interest computed? Loan outstanding multiplied by interest rate. Now who decides the interest rate? At the lending team. Sometimes could be the branch manager, sometimes could be the person who is giving the lending. Now that interest rate which is designed or decided and approved is entered into the system. How is that entered? Manually. Now anything which is done manually, are there chances of data entry errors? Yes. Instead of typing it as 12, I can type it as 1.2. Possible. Will system object to it? Will system calculate 1.2? Yes. There are many areas even in the bank branching environment where there are manual steps involved. I go and do a stock verification. The stock verifications, system will not know that there is a stock verification happened. Someone has to enter it. If the books of accounts or the stock statement is not submitted by the borrower, there is a penal provisions in the lending document. In the sanction terms, there are charges which needs to be charged. Now all these items are manual, which has to be fed into the system, say debit the customer. Once you say to the system that debit the customer, it properly debits the customer and recognizes the revenue. But there would be a chance of revenue leakage wherever there is a manual environment, manual involvement happens. So having said that, most of your bank branch audit, you need to be vigilant as to what activities which are happening manually, because whatever which happens manually, there are chances of errors. So that is where you have a revenue audit, which takes care of the sanction terms versus what is the revenues that are being recognized. Next comes the branch inspection. Branch inspection is done. There is a separate team which does the branch inspection. The purpose of that team is to ensure whether the bank is equipped in terms of sufficient manpower exists, there are sufficient systems there, are there sufficient stationery, everything which needed for a branch to perform itself, is it there or not, which is again a third party team which is coming and seeing it. Then you have a head office inspection. The job of head office inspection is to ensure the people who are working there, are the employees are sufficiently trained, is the assets which are there are sufficient, are they equipped, everything is looked by the head office from the efficiency of the operations. This is a separate team which does the verification. Then on top of it, there is a concurrent audit, which is the auditors appointed, who are external auditors, the qualified chartered accountants, other recruited by the bank to review all the operations which are going on into the branch on a day-to-day basis. So someone who is stationed regularly and verifies all the operations. These are the various risk mitigating measures which the branch has. Having now said this, looking at various items which you are reporting, are you now reasonably convinced that there are sufficient controls in a bank branch? You can peacefully sign the bank balance sheet now. So how many are now confident to sign the balance sheet? Not many? Alright. The one other thing which you should know is, in the bank, whatever we have seen so far has already happened for the financial year 2017 and 18. So your first job when you go to the bank is ask when all these audits happen. You have to take a list, you have to make a note of the dates when this audit happened and get those audit reports and read them. It would take 15 minutes to review each report. So some of the reports have an adverse remarks. Your job is to ensure whether those adverse remarks have been covered or not. Clear? So certain other internal control procedures which they follow is they have a delegation of powers. So most of the transactions and every risk-based transaction is accounted by someone, approved by someone, and they will not take, branch manager will not take decisions alone. So entire operations have been delegated. Each person has a different power. So they have segregation of rotation of duties. So at each time intervals, so a person who is doing that job is rotated, including the branch manager. The branch manager generally typically stays in the bank between 2 to 3 years. After that a new person comes. Now, is it a good or bad? Good? But once a new person comes, he doesn't even know who the customers are. Even the old one did not know the customers. It is good because now the operations are not at the memory of a person's. The operations are system driven. There are set of activities one need to do. Their job is to follow the protocols. Their job is to do the activities. Having said that, we cannot replace everything, the human element, by the machines. There needs some element of wisdom and some decision making which is always done by the humans. That is where you need the branch managers still involving and taking decisions. The books of accounts which needs to be maintained are sufficient, adequate. Every transaction which goes through, there is a record and an audit trail. Every transaction. You will not find any transaction without an audit trail. There is a sufficient accountability on the employees to safeguard the assets. The systems have been sufficiently configured, how it needs to do, what it needs to do. There is account mapping, like if you have to say salaries, it will be grouped under expenditure not into asset. So I am talking about the smallest thing, including a configuration like if you are charging an interest rate, it decides at what time intervals I have to charge interest rate. If the lending is given on 23rd of the month, the interest is not calculated for full month. So all those system settings are fed into the system and someone has done an audit of those systems and ensured that they are correct. There are various independent checks by various authorities, various bodies, we just some time back. So there is a SOD and an EOD. So start of the day and end of the day procedures where the bank software identifies if some closing balances which are ideally should have been a zero balance or some items are not closed, they do a posting and check what is done, what is not done. So those are the various activities which are there in the bank for the internal control. So are you clear with the bank internal controls? Yeah. So you are clear about the risks and what are the controls which the banks are designed to overcome those risks. Yeah. Right. So now we will get into the actually doing the branch audit. So the beginning of the audit is your planning your audit. How do you plan your audit? What's the basis for planning? Time and scope of work. So your planning is always what is your scope. Your planning is always revolving around what is your scope. So now as an article clerk, you would have some small element which you will be doing in a bank branch for 4 days, 5 days, right? But you should know what it needs to be done, how it needs to be done. So for this you got to be part of the overall planning. So let's look at the overall planning. So I'll give you a bird's eye view of how do we conduct the bank branch audit. We will first get an engagement letter from the bank stating that you are appointed. You go and approach the previous auditor, obtain an NOC. As you are obtaining, you can also ask them that are there anything special things which they need to take attention. Do a pre-audit discussion with the branch. You will call up the branch to will understand what type of bank branch is it. Does it have more lending? Does it have more deposit? Is it into asset recovery operations? Even if it has lending, how much is the total loans, of which how many are home loan or corporate loans? All type of various categories of loans. You will take a broad overview for you to plan how do you check those kind of items. So you are getting a pre-audit assessment of the branch. Once you get the pre-audit assessment of the branch, you will start planning how you will be doing the various activities. Once you complete your planning, you actually go to the branch and you conduct your audit. Once the audit is done, your job is to discuss with the branch before putting any comments into the main audit report and conclude your audit report. Then you will prepare a memorandum of changes, affect the same in your books of accounts. Now, typically in any statutory audit, most of the times the financial statements are prepared after your audit. Yes or no? But in a bank, you are auditing where financial statements are prepared. Like you go to the bank, you do the audit, you find some corrections. You cannot change the financial statements of the bank, because after 31st, on 1st April, they generate the financial statement. The P&L balance sheet, trial balance, schedules, annexures, everything is generated, printed and kept in front of you, asking you to sign. You cannot change them, not even a paise, not even a rupee, anything. So, isn't it a risk? So that is where you will give a memorandum of changes. If you think that some expenses are not captured, some incomes are not captured, something is not properly handled, you will not change the financial statements. Financial statements remains the same. You will sign the financial statement subject to your memorandum of changes. In your memorandum of changes, you will say rent for the month of March is not provided. You will debit the rent account and credit the rent payable. You will give them the audit journals. The memorandum of changes are your audit journals. If something is not properly classified, you will reclassify them, saying that this needs to be debited, not this account to be debited. Like if the staff welfare expenses are also posted to the salaries account, you will give one more journal debiting staff welfare and crediting the salaries. So you will give the ledger code or the GL code which needs to be changed. So you will be giving them a memorandum of changes which are nothing like an audit journals. Still you will be signing that balance sheet which is prepared by the bank branch. Clear? Lastly, you will submit the bank audit report. So there will be a list of people to whom the audit report has to go. So along with the engagement letter, you will get an intimation stating one set has to go to head office, one to the branch. So they will give you various set of people to whom the reports have to go, and a list of report with the number of copies which needs to go. So your job, you have to ensure so many reports have been generated. So in your planning of the audit, you will first have to check what is the audit scope and the coverage. So amongst 4 members who are going, who will be doing what? Someone will be verifying LFR, someone is doing tax audit report, someone is doing main audit report, someone is doing deposits. So you list down all the activities of the bank branch and allocate who will be doing what activity. When you will be starting, what is the time which is required to complete it. You plan out much in advance before you land up to the branch. Because you have some very limited time, say 5 days you will be completing. You should know at 1 o'clock on third day what is that you are likely to do is what you have to plan before you leave to the branch. Look whether you are carrying sufficient resource materials, including your stationery, letterhead and everything. So always have the audit guidance notes handy. Whenever you have a doubt, you should be able to refer to it. So if you have to broadly look at, first you will call the branch, understand the profile of the branch. Based on the profile of the branch, you also understand what extent it is automated. Most of the nationalized banks which you will be doing audit, they are completely automated. They are all CBS, which is core banking system. This is nothing but an advanced ERP. So you will also understand what is the kind of automation. If there is something which is still not automated, you should ask that question, is there anything which you will be doing manually? You should definitely ask this question to the branch. Are there any activities which you do manually for you to close your financial statements? Like some branches do not have a locker rent integrated with the CBS. So they have a third party application which maintains a locker rent. From there the data entry happens. Like typically if you have done audit of some clients where they use a different software for their billing. The billing happens in that software and they will post the sales, summary transaction of the sales into their main books tally once end of the day, correct? So they do transactions of the main ERP. So you need to understand what are the transactions which are happening of the ERP. Next, get an assessment what was the position of advances and deposits the last year, what is the position of advances deposits this year, what is the change, are there any significant change or the trends in the bank. Plan who will do the audit and who will do the reporting, who will be doing the discussion with the manager. Now in terms of your working papers will be on the balance sheet related. You have advances and deposits. You will be having working papers relating to advances and deposits. You will have to build working papers other than advances and deposits. Then on profit and loss account, you will need to have some set of working papers. We will see. Obtain a management representation letter. Wherever the items which you do not know but you are still certifying, you will have to take a representation letter from the management. Then as a part of the audit, we do various certificates. We issue at least around 20 certificates. So get the list of the certificates. Against each certificate, get the underlying workings which are there, basis which the certificate has been issued. You have an LFR, which is a long form audit report. Apart from the main audit report, you will issue a detailed audit report which is for the management to know how the operations of the bank branch are efficient. So we have a separate session which is dealing on LFR. So if there are any comments which you are making in LFR, whether yes, no, not applicable, whatever it is, you got to have a working paper saying that why you are saying yes. Even if you are saying no, why or you are saying no, you got to have a separate list of working papers for each item of it. Then audit journals which you are posting, you need to ensure that the memorandum of changes is filled. You can't say assume that in your audit report or an LFR you are writing an item. You can't assume that someone will post an entry into the books. You have to prepare a memorandum of changes entry if you feel that if there are any changes which is needed in the financial statements. So the audit standards which you need to know before doing the audits. In fact, I am sure you guys are more skillful enough. If I have to ask any question on these audit standards, you have exams coming up, so I am sure you have read all these audit standards. But these audit standards guide us what are the various audit methodology procedures which we will be doing in the bank branch. Don't worry, this is there in the handout which is given. You have a look at these audit standards. I am not going to tell you each of these audit standards. So, in terms of your audit planning, you have your audit workings revolved into 3 different items. One, where you will be doing audit working with the items which have to be physically verified. Then some items you will have to verify only in the system. Then there are some items you have to verify both in the system and physically. So these are the broad classification of various items. So I'll walk you through how those various items are there. Physical verification you will be doing for cash balance, random verification of the gold or the various securities, the loan documents, the confirmation received from the borrowers, the audit reports which are conducted by the various people. Inspection audit report, concurrent audit report, internal audit report, revenue audit, RBI audit, all those audits. These are the items you will have to do physically. You cannot do in the system. Alright? Now let's look at one by one. In terms of cash balance, you are expected to verify physically the cash, how much cash is there, to reasonably ensure that okay, the book balance and physical balance is matching. Because you are certifying balance as on 31st March, you will check whether on 2nd March or 4th April, 2nd April, whenever you are visiting, you will check whether the cash, so much cash exists or not, to make a reasonable assurance. How do you check the cash? By counting it. Right? How much cash generally the branch has? Few lakhs. Right? Can you count them? How much time it will take if you count? 10 minutes. If you guys have to count roughly when you visit the branch may be having a cash balance of say 60 lakhs. 60 lakhs, 23,516 rupees 50 paise. You will count? Randomly you will count, is it? Huh? Bundles. So some are bundles, but at least 50% will not be in bundles. Even if it is bundles, how do you know that bundle is full? That's what, see, the smart persons do. If in 2,100 rupees note, I take one 2,000, put it. You will count number of bundles, so gets matching. That's not sufficient. So you have to verify every single rupee. Yep. Cash machine. Now if you load it into the cash machine, it will take time. Because every time it gives 99, 98, but physically you count it is 100. Some notes are getting stick together. So if you have to do cash verification, all that you have to do out of 63 lakhs, from the cashier, you just pick some amount randomly, some 2,500 rupees, 500 notes, 2,000 notes, 100 notes, 10 notes, everything. Put it into a cover, staple it, put it with the cashier itself. Let cashier count the entire cash. After that, you count your cash, because neither you don't know how much is there in it, nor the cashier doesn't know. Put together, if it is matching with the book balance, then the cash is matching. Okay. Then securities held at the gold. Okay. You have to physically pick some gold packets and see whether there is really a gold loan, because gold loans are given underlying security is gold. So when the gold loan is given, the underlying security is gold, you have to pick the packets and ensure whether the gold is there. It's not that you have to check all the gold loans. Pick some loans which are issued during the year, go to the strong room, pick those packets. Next to the packet there would be the Smith certificate stating that so much is the weight of this packet. So check the loan document on the back of it, what is the weight of the item which the person has pledged, what is there in the Smith. Second, look at the number of items, not that the weight has to match. If someone has pledged 3 chains and amount, the weight of it is 60 grams, it's not that 60 grams of the gold you have 3 different chains also. So you got to physically check that exists or not. Next, the loan related documentation. All the loans which have been issued, you have to pick randomly some loans. So from the Excel you have a measure to pick the loans. Pick those loans and sufficient documents are there. You may not be capable enough to say whether the documents are sufficient. Every bank has a loan sanctioning manual which says if this is the kind of loan, this is how you have to sanction. So there is a sanctioning manual. According to that, the sanction happens. So take a look whether the sufficient, whatever the manual says. In case of a vehicle loan, you should have an RC, you should have a key. Check whether that is there or not. So you ask what is the checklist I have to verify, these items have to be there, whether they are there or not. The only caution you have to do is when you are doing a loan documentation verification, please do not use a red ink, green ink or a blue pen. Do not even use a pen, put it aside, take a pencil and use it, because these are these documents need to be produced in the court at a later point. If anything altered, it is a risk to the bank itself. So do not do any marking. As you are checking, you do not tick, okay, this is there, this is there. Do not do anything on the loan document. Then there is an external confirmation. So periodically, even the banks, like you get the debtors and creditors confirmation, even the banks have an obligation to get the confirmation from the borrower. They comfortably get a confirmation letter, unfilled, kept signed by the borrower, always kept in their files. Whenever you ask the confirmation letter, they will fill a date and fill the amounts and give. But banks have a policy to also obtain a confirmation letter from the borrower. Then what you need to verify, both system and physical, is wherever the vouchers which you have some expenditure which you need to scrutinize, you open the ledger account, say salaries, you open the ledger account, see whether 12-month entries are there. Or staff welfare or repairs and maintenance, you have some item which is more than so and so value. You glance through the expenditure ledger and get the physical copies. Fixed deposit, back of fixed deposit, there should be a lien mark that when the lending happens. The sanction ticket and the terms. If the sanction ticket says 12% rate of interest, open the borrower account, see what is the rate of interest. So these are the items where you need to do both with the system and physical. Then certain items you will only be doing in the system. Every time there is a change in the interest rate, it is updated in the system. You pick any account and randomly check whether that change has been applied or not. Because the way the lending is done to the borrower, they will not lend at 12%. They will lend at the bank lending rate, the prime lending rate, plus 2% plus 3%. So RBI, whenever they change the lending rate, they give these instructions to the branch saying that I am changing the lending rate. Based on which they also change it into the system. So you have to see whether such rate change has been affected or not. Extract all the customer accounts, see if there are any duplicate customers which are there and they have created multiple accounts for the same customer. Customer ID is generally unique and the loan accounts are one customer will have multiple loans, alright, but let them not create multiple customer account IDs for the same customer. You can cross verify. Then there are standing instructions which are given. Just check whether the standing instructions are updated in the systems. In terms of execution of the audit, the first and foremost thing which is expected from you for a smoother audit is financial statement preparation. I said that financial statements are prepared. Your job is not to prepare financial statement and audit. As a part of audit execution, I am saying financial statement preparation. Don't get surprised. I am not saying that prepare financial statement. It is a financial statement which is already prepared. Take it. It is a soft copy. Take it into an Excel spreadsheet put it into a simple way which you understand. The financial statement which is given by the branch, each CBS is customized in a different way, which is given by the branch, sometimes runs into 2-3 pages, and some items on the left side, some items on the right side. It is not easy to identify or digest in one glance. So if you quickly prepare a balance sheet, preparing a balance sheet of this type will take 5 minutes, because the data is already there. Just quickly organize, fill the data. Now you know what is the size of advances, what is the size of deposits, what is there in your balance sheet. Once you prepare a balance sheet, then take out all the items which are other than advances and deposits. Ideally, the balance sheet of the branch should only have advances and deposits. But if there are items other than advances and deposits, then you got to look at what are these items which are other than advances and deposits, because you got to make a special focus on that. Once you prepare the other than advance and deposits, both for advances and deposits, get the subschedules. If in this case they are saying a loan balance of 8.64 crores, get to see how many OD accounts, how many term loans account, how many bills purchased, how many SB account debit balance, various things. How they get the arrived at 8.64 crores. Now these all reports exist in the system. Nothing needs to be done manually. The entire exercise can be done in maximum in an hour's time. Your job is to download those reports. Like in Tally, you want balance sheet, you go to balance sheet, you can navigate down, or in an ERP you have a reports module, go to the reports, balance sheet report, P&L reports, you have a reports. In fact, in your audit engagement letter, they will also give you an username password, audit username password for you to download the reports. So it depends on whichever the type of the bank you are getting. You ask from what is the software they are using, maybe Finacle, FlexCube, or any Infosys software, could be various softwares. So each software has a standard menus of downloading the reports. You can easily download those reports and manipulate it. When it comes to, you will do the same reconciliation of balance sheet, advances and deposits. When it comes to P&L account, again prepare a simple P&L of how much is interest income, other income, interest expense, other expenditure. So you got a glimpse. How much of it is the current year, how much is the previous year. So you know how do you want to do your audit planning. So some issues could be your schedules are not matching. So when schedules are not matching, it means you have missed out some line items. Your job is to, once you get all the schedules, then you know what is the query you can ask the branch manager, which account you want to ask them to open it. Certain items which are not dealt at the branch. So these are the things generally not dealt at the branch, it is done at the head office, including provision for income tax, audit fees, NPA provision, depreciation, or some branch interest on overdue deposits. These are all done at the head office level, so you need not worry. So you should also know what are the items which are not done at the branch, because you should not pass an MOC for any of these items which is not done at the branch, which is done at the head office level. So the broad areas in the balance sheet schedules, you will prepare schedule for advances, deposits, sundry assets, sundry liabilities, contingent liabilities, and inter-branch reconciliation. Well, the easiest way to do an audit of all these items, advances and deposits, get the customer-wise, borrower-wise listing, see how long it has been aging. So you have a different audit technique to prepare what accounts you have to verify. Other than advances and deposits, you have to get an underlying line items. For example, in Tally, if I ask you to how do you verify a debtor account, what will you say? You will open the debtor ledger and press Alt B. You will see the bill wise outstanding, how old it is, whether it is an advance not recorded or it is on account. You will get all the underlying line item for each debtor, creditor, for every item, right? Similarly, even in a bank, for every item in the balance sheet, you will have a references. How long this item is lying in that ledger, whether it is an accounting error, etc. If you find an item in your sundry assets and other assets more than 6 months, you also have an obligation to report in your LFAR. Maybe that is an item where the expense needs to be accounted for. Like they have paid someone, recorded in your sundry asset, not expensed into the P&L. Clear? So every item of the balance sheet other than advances and deposits, you have to get the underlying the references. Interbranch reconciliation, you have to get a confirmation the head office balance or the interbranch balance that is matching. So head office or someone have to say that it is matching. Cash and bank, you have physically verified. P&L, look at the income heads and expenditure heads, prepare a small trend line whether the 12 months expenditure are happening or not. Looking at the size of the operations, you will be reasonably able to comment whether that is sufficient or not. Please read previous audit report and all other audit reports. In terms of the procedures and documentation, advances, this would be covered in detail during your LFR. I am not covering it. Both advances and deposits will be covered in the LFR discussion. Yeah. So IRAC, you just need to understand an IRAC what it means. It's an income recognition and asset classification. The assets of the bank are broadly classified into performing and non-performing. Non-performing means it's not bad, it ceases to recognize income. If the customer is not paying in time, they park it as non-performing. So all that for you need to know is if it is an asset is a performing, the interest gets recognized. By the way, none of you will be doing this in the branch, but you should have a fair idea. Non-performing means the customer is not paying interest or principal in time. There are various guidelines. So non-performing will be into three categories. Either it is a substandard or a doubtful, or if you feel that there is a threat to both interest and principal recovery, it will be treated as loss. And doubtful is classified into three categories: D1, D2 and D3. So I will not cover the definition of the non-performing. Provision is done at the head office. The provisioning, how much is the provisioning needs to be done is given in your hand material. This is more for your academic purpose. Now other areas which you need to focus is there are certificates which you issue. There is a tax audit certificate, the Basel, long outstanding sundry and suspense, bank guarantee commission and interest subvention. Now these are the main certificates which you are going to issue. You have to read those certificates, ask what are the underlying documents based on which the numbers in those certificate has come. Once you have those underlying documents and you are convinced with those numbers, those becomes your audit working papers. I have given list of certificates which generally you issue. There are 14 different certificates, but there are many more certificates. What certificates you should be more covering is about interest subvention, long outstanding of sundry assets and other sundries, bank guarantee commission workings. Then in terms of the working papers, you would have to use Excel as your audit tool, and you have to build your working papers which are more like your reconciliations and annexures, which have to be generated from the Excel. It would be a stupid question if I ask how many of you do not know Excel, right? So however, some small functions you should be able to know. Why Excel? Because you all know Excel, it's a easy to use the program and easy for documenting. Certain things which you should know in the Excel is importing of a file into an Excel. Most of the bank branch reports when you generate, either it could be a CSV or a HTML file. How you copy an HTML file into an Excel? So if you do not know, just Google it, understand how a CSV is converted. In the next slide I have also given it. Understand how you will split the data from text to columns. Learn some conditional formatting. Date is generally it is in MMDD YY format. Convert it into easily DD, and month I would always recommend use the 3 characters. Instead of 02/04/2012, it could be 2nd April or 4th February. Make the month as absolute and then the text, so you will know what the date is. These are the formulas which you should absolutely be knowing. If you are doing the bank branch audit, Don't expect your principal to know because you are building the working papers. You should know how to prepare a pivot table from a large data, condense it and put into a report. You should know how to use a if command. It is a very simple, pretty simple command. How do you do concatenation? Because sometimes when the text date goes into multiple columns, you should be able to concatenate. Prepare some graphs to understand the trend lines and window dressing and other things. Use of SUMIF and a VLOOKUP. These are the formulas expected you should know when you are doing a bank branch audit. Conditional formatting, it is there in the Excel. It will be coming as a handy most of the time. Removing duplicates, identifying loan value greater than 2.5 lakhs, identify loan sanction during this period to this period. All that in one go system will do it. Please understand how do you do the conditional formatting. Pivot tables will give you the summary of the entire reports. If you have to understand the if condition, this is like an if condition. If condition, if it is true, if it is false, what do you have to give? So you have list of loan accounts, you apply the condition, it will give you a simple list. What are the documents you have to verify? In case of checking whether the asset classification is correct, you can prepare a master table of what is the classification based on an NPA date. Apply a VLOOKUP whether the classification done by the branch is correct or not. Most of it is system driven, but as a part of your audit workings, you should be able to use it. Prepare a simple graph line on various dates. It will serve you as a purpose of whether there is a window dressing. The deposits and loans are they consistent over the period, or during the quarter ends and the year end is there a very spurge in the trend line. Alright. So these are the various things which you should be knowing while you do the bank branch audit. The working papers comes as a handy, and let me repeat that the planning of what needs to be done is very critical. Once it is planned what needs to be done, before you start the work, you need to understand how you would do that. After doing it, what is the working paper which you will have it as a part of the audit evidence is even more critical. So with this I conclude. Thank you so much for your patient listening.
Thank you, sir, for the in-depth speech on introduction to bank branch audit and audit working papers. Some of the tips were very helpful. We will implement the same. I would like to take this opportunity to request Chairman of SICASA, Shri A. Srinivas sir, to present a memento to Venugopal sir. Thank you, sir. We have a small tea break for 10 minutes now. So the time is 12:14. 12:24, please be back. It's on the canopy. You can go to the canopy for tea break.